A conversation with Shishir Joshipura of Praj Industries is as much about what Praj has done in the quarter and as much about where the industry landscape looks or what the industry landscape may look like over the course of the next 3 to 6 quarters, because a lot keeps on changing in the areas that they operate in, be it input cost pressures, be it the kind of opportunity size, or be it government moves that happen. This quarter, one good thing that stood out for me, at least in the results, aside of course, the very strong revenue growth, is that it seemed that the seasonality aspect is kind of getting altered or reduced a little bit. Let's get him in on the conversation to talk about that and more. Mr. Joshipura, I must tell you that this quarter, there are at least 3 or 4 questions that have come in from your investor community who tweeted them out to me, asking me to ask you, so I'll do that as well. But first, congratulations on a healthy set of numbers.
Well, thank you, Neeraj. Always a pleasure to converse with you. And as I would like to add to what you said, to say that our conversation is also not about only 6 quarters, but probably a couple of generations ahead, as well as to what we will do now to help that future be preserved in a sustainable way. You know, and I will always look forward to it a lot.
That's a powerful line, and we'll talk about that too. First, the near-term minutiae. Good quarter. I mean, 89% jump in revenues YOY, even though the base quarter might have been a bit impacted, is no mean feat. You would have been happy, or would you believe that there were some spillovers which, if they had not happened, would have made the quarter look even rosier?
Well, I think from the top line perspective, as you rightly said, this is a very, very healthy growth, because also there is a demonstration of the fact that the capacity planning that we've done over a period of time is now playing out on a repetitive quarter basis. I always tell that we can always have one good quarter on any dimension, but if I repeat it in the next and the next, then it starts to tell me that now it is here to stay, and it's not peak once and then dip in the next one. So from sustainability perspective, I was very happy that we were able to demonstrate a volume growth which was building up over a period of time, and I think that that's a good sign. So that's a good point. On the other hand, I hope and I wished that the volatility that we saw in the steel prices, raw material prices, something that we didn't have to cope with, because then it would have looked much more rosier. Because it was changing so rapidly and in such quantum, especially in the period between 15th March to 30th of April, in that period of time. Although it was already, as you're aware, was rising right through the year as well, but that period became a completely different ballgame because of what happened on the metal exchange and the nickel hedging issues and stuff. So clearly, raw material price is one dimension. The second is, all said and done, there is a negative impact of the Ukraine war, and the negative impact has 2 dimensions to it, and I always say 2 negatives finally make a positive. So one is the fact that the decision making has, for very clear reasons of risk perception on the funding side, etc., has got shifted in European markets. It shifted out by maybe 2 quarters from where it should have been. But the more important thing is, this war has also very, very clearly established the fact that there needs to be a very differentiated view that each country will have to develop around its energy security issues. And the second is about this very clear understanding now. I don't think there's debate anymore about the fact that as humanity, we need to transit. The energy transformation is here to stay. We can continue to increase and consume more energies as more and more people start to rise above the poverty lines. They get access to modern technology, etc., etc. But at the same time, they don't have to repeat the mistakes of the current developed countries of using fossil fuels and damaging the environment. The progress does not have to come at the cost of the economy in the future.
Yeah, well, and that aspect, Mr. Joshipura, I will talk in just a moment. I just first want to kind of tackle the here and now beforehand. So here's the question. I thought that so last quarter we had this conversation about you having developed some in-house practices which could help you able to predict when the margin pressure points could come about so that you can tackle them better. And And so is that still not quite yielding the results that you require? Part one. And part two, I read a note which said that the raw material led margin pressures could continue, but seemingly the commodity costs have come off a little bit. So what's your sense of what could happen in quarter two, quarter three, to input costs and thereby to margin pressures?
Yeah. So in terms of our processes and what we want to do, but I always believe that we can do better than where we are. And that's what our team is. Because we can't say that innovation has stopped. We reach to a level and then you start what next and why and keep improving, right? So I don't think that we can say, you know what, as far as processes and management practices are concerned, we have arrived. We are not. We are an evolving organization, and the science of management is also evolving. So I think we need to be on our toes and keep changing as we travel along the path. From that perspective, I think we are doing the best we can. We are, and that is not to say that we can't do better. Of course, we can do better, and that's the question that we are asking ourselves. In fact, this afternoon I'll be speaking to our senior management team along with our chairman. That's the message that we are giving to them, saying we cannot have this feeling of the fact that we are now here. We're not here. We are just here as a transitory moment in time. We need to go forward, and actually our potential is far ahead of where we are today. So that's one dimension. On the raw material side, you're right. We have said this, that we expect the second half of the year to be much better than the first half. Because the long cycles of execution, these 2 quarters on commodity prices impacts already given. We've already seen one already gone by, and this one. But as we go to the next quarter onwards, the change direction of the curve will start to become visible as we move forward. We have done many things. We have spoken with our customers. Many of them have been very supportive. They have agreed that we came to a very special time phase. They have even modified the contracts. So it's yeah. So there are different, what I would call as different levers at play. But we have to deal with, hopefully no more with this kind of volatility that we saw.
So Q2 might have still some pressure, but second half will be better.
That is correct.
Okay, just one quick follow-up here on the margins. And this is something that I think, so there's a gentleman who's put out this tweet, and he seems to be a fan of you and your company, but says that when will we see Praj clicking in, I'm quoting it verbatim, when will we see Praj clicking mid-teens margins? Is the pricing power not as strong for the company, which has a lion's share of the distillery market and cutting-edge research as well as products?
Well, I don't have a date when I can say, okay, on this date onwards will become margins in teens. That's what we also wish and we are working for. Having said that, I think there are characteristics of, so one of the things that has happened to us is there's an extremely strong domestic growth canvas right now that is unfolding, right? Because at the back of the EPP20 program, the domestic market margins are not same as what we get in the international market, where obviously they are much healthier compared to the domestic market. So even as I was mentioning last time also, that our export grew 37% in the previous year. We grew 40% of our booking this year as well. In the quarter went by. But the 30-40% of growth is not good enough to compensate for what's happening on the domestic side. So as a mix of the company, the overall margins percentage starts to look a little not so much in the teens as somebody puts it. But and of course then coupled with the commodity pressures, etc. But we are very clear, innovation is the only way out. Some of these things, as they start to play, the newer technologies when they start to play out, because 1G, first generation technology in ethanol, is now fairly standard across the world. But as low carbon ethanol strategy, the RNG, the second generation ethanol, when they start to play out in the auto mix as we move forward, maybe a couple of years, not this year, but from next year onwards, we will start to see a change there as well.
Got it. Was this quarter a remarkable one in terms of growth in non-sugar orders and maybe things like vendor development or scalability in order execution? Because 2 or 3 notes have spoken about it, Mr. Joshipura.
Yes. So one is the fact that we, as a country, we have been very sugar industry based ethanol production kind of a scenario. Whereas now and that is something that we had already predicted. So we now see 2 running quarters where starchy feedstock capacity creation is 2/3 of what the overall capacity creation is taking place. So very clearly the shift is in favor of starch. Now there are issues is not the right word, but there are dimensions of starch-based ethanol production. For example, it is not seasonal. It's right through the year, whereas sugar tends to be very seasonal. On the other hand, it's a new feedstock. It's a new set of entrepreneurs. It's a new industry dynamics that is at play, new regions of the country. So there are some other dimensions of the production on the production side which are at play. On the other hand, sugar is very very established. They understand this whole dynamics right from feedstock all the way up to the logistics of making it available at the doorstep of the oil marketing company. So obviously their knowledge and experience is very, very wide. They are also saying how can they keep on adjusting their product portfolio. There are sugar pricing dynamics, and there are technology dynamics at play for these sugar guys. Some of our friends are also putting what I would call as a plant which is co-located, where they will connect a grain-based plant as well to the same setup so that they can run it right through the year. So different solutions are emerging. Biosyrup is another solution that we have said that if you don't have access to starchy feedstock, well, you can still run your mill or ethanol plant for the full year. So for each, there'll be a different stroke depending on their factors or their ecosystem around that. But overall, we see in the last 2 quarters, and that was also intended, that a lot of capacity creation will start happening around starch-based feedstocks. Sugar is already pretty strong, and it will continue to build. But obviously, if somebody starts on a lower base, their growth prospects are much higher.
Okay. Some updates on the 2G ethanol plants for the 3 OMCs, because I presume you said on the call, if I'm not wrong, that the IRRs which were negative are now no longer negative. So what's happening there? How does it proceed?
Yes, very interesting development. So we are nearing mechanical completion of the first plant anywhere in the world for that matter, based on rice straw. We will pretty soon be commencing commissioning. We expect that before the year ends, the full production levels will be available from that plant. So, I think the world is watching as to what happens. Many big companies have tried, but they have not succeeded. And we are very confident that we will. So we'll have to see how that develops. So that's the one plant. The other 2 plants will probably go in a year down the line. So maybe they're 7-8 months behind the first plant. So 8 months, another 8 months. So maybe towards the second half of the next year is when we'll start to see activities around those 2 plants as well. We will see, based on this, I think a lot of people that we have dialogued with, even outside India, have said, well, we believe that maybe you guys can do it because of the way you are structured, the way you approach this whole thing, the way you invested into it, the dimensions that you have addressed, and the capability that you brought. However, because of the past of what has happened in this industry, we would want to see one proof on the ground. And I think that's a very fair expectation from the industry, that they would like to see one proof on the ground, and we'll be able to showcase that. That's where 2G is.
So could it be, and I'm not saying it will be, I'm not asking you to predict, but hypothesize, could it be that on the successful completion of all of these 3, could there be a Jacob effect of sorts? Could it be steady state? Or is it in terms of order inflow? Or is it difficult to say because technology could be moving very, very quickly?
So I think what's very important is where is this growth coming from? So one, of course, in India, we would have demonstrated a capability of a supply chain in a feedstock, which is currently considered as a waste and is burnt standing on the field. We would have put it to good use and demonstrated that. That itself, combine that with this negative to positive travel of the IRR, which we have done now. And I think one commissioning will also give us a lot of insights. There is absolutely no question that when we commission the first plant, it will also give us a lot of insight into what needs to be done, where is the debottlenecking required, or where we can free up resources, where we can free up capacity. So today everything is on paper and in our heads, but I think then once we see it practicing, it will and the interconnectivities of different dimensions, that will also tell us a lot about what happens. In the Europe, it's already a given that the future ethanol production will have to be second generation as we move this. That's what I was mentioning, that war has pushed it by 2 quarters, but will start to happen. So there the dynamic, but again, what will definitely happen is that if we, as and when we put this plant on the ground and we commission it and we demonstrate to the world that yes, the parameters that we say are achievable, the reliability is there, the whole canvas will start to change, because this addresses a very important feedstock today, which today is a waste. And actually creates a very different dynamic of air pollution and health hazard and things like that. But it becomes an income stream for people. And this will then get combined with another very interesting development that is just beginning to unfold, is around this sustainable aviation fuel.
Yeah.
And this will become a very good route for very low carbon intensity sustainable aviation fuel as well. So,
you don't reckon that if indeed inflation stays higher for longer, that can alter some of these plans? It's not that material, or is it?
I would believe that there is a, what should I say, no comeback commitment from the players right now to say this has to happen irrespective. In a very unusual situation, I cannot say. But the normal run of business, by all means, this will be the positive part.
Okay, great. A quick word on the entry of the biggies into biogas, right? I saw an announcement 2 days ago wherein the Reliance Group and the Adani Group have both announced small forays there. Now, what does this do for the landscape and for Praj's role within that, if at all?
So I think this is very positive news. Right? These are two largest players in the country on the energy side. Very clearly, so especially coming from the private sector, they have shaped a lot of energy landscape and industry landscape in India. So the very fact that they have made a commitment shows that there is a clear market and potential. That's the way I read this. That their commitment shows, and obviously their plans will not be putting up one or two plants. They are very aggressive. We are in dialogue with them, both of them, and they will obviously want to, yes, there may be some initial, what I would call as calibration that may be required, but after that, I'm sure that this will start to roll out in a very, very different fashion, because clearly this is a very good solution, very distributed solution, very close to nature, and yet addresses practically every what I would call as a dimension that needs to be added on the social side, on the economic side, on the environmental side, on financial worlds. So very few solutions address everything in on one basket and practically everything in a very positive sort of manner. CBG is a solution that does that.
Yeah, and I reckon because the government's pilot is kind of a bit of a stop-start, it's good to see the private space starting to come in and making a dash for that, I presume.
Exactly, and again, as you said, not to foretell the future, but from what we know today, it looks like that the natural gas prices are likely to stay very high, the way what's happening in the world. And that makes CBG plants that much more attractive.
Is the government starting to rethink on the stop-start thing, Mr. Joshipura? I mean, are you privy to any of those conversations at all? Because just trying to understand.
I know that from CII side, we had made a representation. Government has been actively listening to what we are saying. I think that's a good dimension. There has been a price revision which was long sought and indexed to pump price. I think this is a very bold move by the government. They are rethinking on some of the supports on the capital side that was promised, which they had, where they reinstated it partially, but I'm sure there's a dialogue going on to do that, at least for the first 100 plants, or whatever that number comes to. So what's very critical is that there is a clear move in the direction to say, oh, this is a very positive solution that is possible. Now, the whole ecosystem in our country so far has been very liquid fuel for it, right? Liquid or solid fuel. We are not gas-based economy. So the whole ecosystem has to come into place, the taxation and the distribution and the last mile connectivity and the piping systems. So I think all of those we will start solving as we go forward. But the good news is that there's a clear commitment to solve it. And I think that to me is the very positive side.
Great. I have two more questions, Mr. Joshipura, at the risk of taking too much of your time, but two more questions. One is the slightly longer term question. We are the 75th anniversary of Indian independence. We are an oil guzzling economy that imports a large portion of our fuel requirements. You mentioned at the start of the interview that there can be some moves that have to be done or should be done or are being done, which might change the landscape over the period of the next 10, 15 years. for the people coming ahead to inherit a better country in a better space. Can you tell us about one or two things that are happening currently, which you might be a part of as well, and which give you the hope, which might also make the business case strong?
So there's a very famous picture which I saw, which when the Brazilian delegation came to India, they show this picture literally in every conference of theirs. They show a photograph of Sao Paulo before introduction of flex fuel engines, and then they show it after 2 years after introduction of flex fuel engines. 2 years later, you can see the buildings. 1 year in the previous photographs, you can hardly see a haze, and that tells you a lot about. And they said this is the real picture. So this is not. And this is not being propagated by somebody who's interested into this from any other perspective, just to say that, look, this is possible, right? And that picture has stayed with me. And I think that's what actually tells us that as we move forward as a country and a rapid development, our needs are going to change. Biofuels or clean energy, if I can put a larger word, clean energy has to have a much more share of our energy pie compared to what it has held so far. And I think a lot of being done around wind, around solar, biofuels. And I think all of this will have to, they will increasingly find a higher space of the pie, if I can use that word. And that's my vision as well. And then it doesn't get limited to what I was just road transportation, but it also then transits to aviation fuels, it translates to marine fuels, it translates to the way the whole ecosystem, the Satat program that we talked about a little earlier, which is distributed energy, not centralized energy. I think the whole ecosystem, both in terms of what's local pollution and local issues, but also a longer term, carbon intensity reduction solutions like sustainable aviation fuels, marine, they all will have to start playing in tandem. So the way I see, and then this always this debate about saying, hey, so what happens if e-vehicles come along, and then what do you do? The point is this: I think we have to understand that each technology, we are moving to an era which will be coexistence of multiple technologies, and increasing role for everything that is clean and renewable, whether it comes from low carbon fuels, whether it comes from no and transits to no carbon fuels, as I call them, green hydrogen. We've been hearing about it. So I think we will see a good new energy mix emerge, which is good in the opinion, because it will not force the end user to change their habits. You still go to the pump, you still fill up your vehicle, whatever you have, and move on, right? Whether you charge your car with electric socket or you put it into a biofuel pump, that depends on what technology you are using and what is your need. But clearly, the renewable energy or the clean energy will have a much more increasing play the way we go about. That's one. Two, I think some of these habits change because sometimes people need incentives, sometimes people need, as we call Samdam Dandabhed, all the four will have to be used to different degrees at different times. But what's important is we understand that a carbon tax mechanism will come into play, if not today, then tomorrow. In whichever form it comes, it can start on a smaller scale, then go and expand itself to larger scale. But obviously, we have to understand that we cannot continue to pollute in a manner that compromises the future of our children. That is not okay. And I think that dimension is something which is now clearly being better understood by everyone.
Wish you more power in that. Mr. Joshipura, before we wrap up, just one final question. And I end the interview with the micro as opposed to the macro, because at the end of the Q1, you've clocked in a really remarkable revenue growth line of about 90%. The market was penciling in an annual growth rate for FY23 of about between 40 to 50%. Does it make the ask that much easier? Do you reckon that that's a distinct possibility, that you move from, let's say, 2,300 crores to about 3,400 crores for FY23?
Well, yes, in the sense that, so how do capacities work? So you build a capacity, and then if I only use this much, then I've lost this much. The lost capacity doesn't come back, right?
True.
So in a manner of speaking, I made sure that that gap is very small, what we couldn't utilize, right? So, and then you multiply it by 4 or 5 or whatever that number comes to. So that clearly indicates that we are currently on our order book on hand, which is another dimension, is fairly solid. So that allows me to do this. So as you rightly said, indicative numbers are in that territory. We'll have to see where actually we'll end up.
No, because if you only end up with the indicative numbers, which means you kind of go down substantially from the growth rate that you established in Q1. That's why I was saying.
Well, the thing is this, that okay, I'm not growing 90% every quarter. And that's,
true.
But so as I said, so we filled the gap which was there. So that does not mean that we will not grow in other quarters. Of course we will. But there, as I said, you start on a lower headroom with bottom of the pyramid, then you have higher headroom to grow. But what was important and heartening for us is we have, in a manner of speaking, this also tells me then that I'm utilizing my resources much better, my return on asset is much better, I'm more predictable. I'm not loading it up at the end of the year saying, yeah, okay, we'll do everything in the last quarter and the last month. So that's what been our big focus has been, saying, let's try and even it out as much as we can. We are not there yet. We are not where we were, but we are not where we want to be. So we are somewhere in between, and we'll see how that develops. But obviously, a growth every quarter is something that we are.
Yeah, makes sense. But tremendous stuff. Wish you all the best for a bunch of these initiatives, a lot of which help the country as well, help the earth as well, Mr. Joshipura. So thanks so much for all of that, and thanks so much for talking to us today.
Thank you, Neeraj. It's a pleasure as always.
Likewise, Mr. Joshipura, trust me on that. And viewers, thanks for tuning in.
Thank you.